Hello, trading is closed on April 1st, 2021. We always begin with our disclaimer. It's my trading plans for Monday, April 5th, 2021. I can be completely wrong. Any trade should be at your own risk. Please observe the rules of my channel. My email is mejt.trades@gmail.com. Look for the pattern with the early low. This is it. Monday's pattern also has the early low. We said if we gapped and overtook the high of day, ideally by gapping over it, the normal bullish character of yesterday's pattern would be restored, and since we had a higher target, that wasn't impossible. We did have the gap up. That worked. The target printed. There's a new target from today's pattern, 4007.37, and unless we gap up smartly, that's today's call. This is a pattern with the early low. Monday also has the early low. Normally it's positive when you have the low of the day in the first 5-minute bar and the high of the day in the last 5-minute bar. This could be positive too. The catch is, with about 25 minutes left to trade, this blue line will show you were under all these intraday highs, despite gapping up, and the timing of this late wall into the close makes it very suspicious. There really wasn't much activity going on. A 3-day weekend was coming up. That's not the time professionals buy with abandon. If this is public capitulation, and we'll see some more signs, it was. The bear is capitulating. If that's what it is, ideally we should gap and undercut this low pretty soon. And there is a 50% chance you're going to gap down when you have a wall into the close like this. Now it's less likely than normal when you hit a new all-time high and when it's open before a long weekend. Tops aren't supposed to happen, holiday weekends. But this timing is very suspicious. Professionals aren't going to go along with abandon right when liquidity dries up. Let's take a look at what MEJT had to say during the day. It said, this is a false move. Target's 4007.37. Now I gave up on DeMark's indicators, his combo sell and sequential sell a while ago. They've failed on me too many times, but this is a weekly chart, and for those who keep track, today was bar 13 of a combo sell signal. When this stuff works, it's a major signal, though it isn't a pinpoint timing indicator. And I'm not going to claim the signal isn't going to fail again, but there it is. I've never been happy with the wave count I have here. It's just very tough to count this. I know a number of other people are counting this wave as an impulse. I never did. I always thought it was an ABC. And if it is an ABC, you now have A, B, C, with C equal to A within about 12 cents, and B right at the 50% point of the whole rally. So if that's the right count, this is just a perfect top. Doesn't mean other numbers don't work too. All the way up, I had numbers that worked. This is one of the best targets based on the system I've come up with because A is equal to C, and it makes today's high a candidate for the end of this leg of wave blue B. You can also draw a line from this low to today's high, and it's not perfect with the hits, really, but for the magnitude of this rally, it's awfully close. So, weekend or not, If we stall here, it's at least plausible. Monday's pattern has early low, doesn't mean you won't gap up. The low of the day was in the first 5-minute bar and the high in the left. It is actually is a bullish pattern. It should lead to higher prices. And markets aren't supposed to top on Friday. I know today's Thursday, but it acts like a Friday or holiday weekends. So there are strong factors arguing for the rally to continue, but it's quite negative. We have a lower MEJT target. Unless we gap up smartly, it should print. There's a hole in the wall gap today. It should fill and usually fills promptly. Here's your wall. Here's the gap. The timing of the late rally makes it suspicious and vulnerable to reversing fast. The volatility indices, VIX and VXO, collapsed. It's a sign of capitulation by the bears. This wasn't just a big drop, it was a huge drop. These indices measure the premiums investors are willing to pay for puts, and they just aren't willing to pay for much of a premium on puts at all. And the American Association of Individual Investors and the RIDEX funds have sentiment indicators, and they're only seen at tops. What's also only seen at tops is that more than 94% of stocks in the SPX are over their 200-day moving average. It sounds bullish, but when it's that lopsided, there's really no place to go but down. The wave counts once again compatible with the end of this leg. And weakened or not, today's high is a candidate for the end of this rally leg. I know it isn't supposed to happen on weekends, but rules are made to be broken. It's a candidate, if you ask me. We use the mixed signal rules. If we keep going higher, these are my calls for next week's patterns. If we keep going higher, the idea is killed without much of a loss. But if this holds, we start down, particularly if we gap under this, which is, I think, plausible. We have lower targets, and this hole in the wall gap should fill. This hole in the wall gap should fill. And weekend or not, this is a candidate for the end of the leg. It's not the only one, but it's a pretty picture if it works. Monday has the early low, and that's today's call.